I'm trading a Robinhood account from $3,000 all the way to 1 million, and I'm showing you every step of the way how I get there. As of September 30th, Tuesday, we closed at $34,926. We are down $885 on the day, but on the week, we're still positive. Same thing on the month, the last 3 months, and year to date, we're up 110%. And really what I want to talk about today in this video is about what's going on in the market, of course, but we did enter into 2 new trades. So I want to talk a bit about those and what to expect over the coming weeks, as well as some of the different positions that we're still currently holding. There's been quite a few developments, and then I'm gonna give you my overall market thoughts for the rest, or really for the month of October, as well as the rest of the year. If you aren't already, I do post all of these trades, the entries and the exits, in Discord for free. I'm not charging for any of this. You can see all of these trades in real time. And then of course, I also have this trade setups where I actually show you what my thoughts are, what my profit taking levels are. We just entered into Target as well as lunr. So those were 2 new trades that we entered into. And then Target, we got a little bit of luck on our side. There's a potential there that there could be an acquisition by a private equity group that would buy them out. And usually they do that at a pretty steep premium of like 20 to 30%. So we could see a pretty big move on Target if something like that does happen. And then of course I give my overall market thoughts. And then like even here with nbis, I talked about how Zuckerberg was very bullish on super intelligent, and I could see a meta deal coming, and nbis or CoreWeave would make the most sense. nbis just partnered with Microsoft on a $17.4 billion deal. And then CoreWeave, what do you know today? Meta just entered into a $14 billion deal on CoreWeave, and we saw the stock up over, I think, 12 to 15% at some point during the day. So really bullish on these GPU farm. They're building out these data infrastructures for the hyperscaler companies like Amazon, Microsoft, Google, Meta. And I really am still very bullish on nbis as well as Marvel. And then Wolf has been doing really well, but I did not enter into that one for full transparency. And then of course we're still in Litecoin, and then these are the 2 new positions. But make sure you guys check that out and join that if you haven't already. So just spinning through the account here really quickly. The way that we're playing Target is we're using a series of debit spreads. I really like these because it kind of removes a little bit of the error out of entering into a contract and then say, the price goes down a bit further. Usually when that happens and you're in naked calls, you get hit pretty hard. But with spreads, you kind of just need price to be at the price level by expiration. And so that does 2 things. With a naked call, you just have to be right once, but with a debit spread, you have to be right twice. And therefore, you should be rewarded for actually predicting where price is going to be by that specific date. So you can actually get better returns using spreads. And I like to use it in a smaller account. In my other account, I'm mostly just entering into naked calls. But with Target, what we did here, and this is kind of what we did with nbis, as well as Hims and Hers Health, is we entered into a bunch of spreads. I actually got some naked calls here because I figured I can always spread them later by selling a higher strike for the same expiration, or even an earlier one if I want to run like a poor man's covered call, even though this is only about a month and a week away. But what we did here was just entered into a series of debit spreads, and I'll kind of show you on the chart like what I was thinking here, right? So Target, really what I wanted to do in this potential setup was Target's on my watch list. It's just a bunch of stocks that I watch. And Target was one of them. It sold off actually back here in December and early January. I was trading Target in my other account and I was shorting it. I was playing this bear flag and I was shorting at the upper end of this range, and then even here on the break. And we made some really good profit, couple different positions, just entering and exiting, scalping through this trade. I think we made like 500, 600% during that time. Now that Target has fallen into this $84 to $90 range, that is like a key support area. As you can see, there's 2 low volume nodes and then this high volume shelf. And so price likes to kind of chop within this range, but because these 2 nodes are so close together, usually you'll see a quicker movement between $84 and $90. And it didn't quite get all the way down to that 84.42 level that I would prefer, but it started to break out of this downtrend, right? And it also broke into a new low. And so I know that Target, it has a high dividend. It's like a 5.19% annual yield on its dividend. And because of that, I did enter into this trade because the ex-dividend date is November 12th, and their earnings, I think, is on the 19th of November. So I knew that there would probably be somewhat of a retracement of this downtrend that we've been in, where it's just been selling and selling and selling. You had some pretty high volume here near the lows, and then even here when it tried to get a little bit lower, there wasn't as much volume there. So I figured that sellers were getting a little bit weaker, and we started entering into this trade with those spreads, front running the people who are going to buy this stock to get the dividend on November 12th. So the thought here is we can push back towards over 90, that's the resistance level, and try to get back into this volume shelf and hopefully potentially push all the way back up to like this 102 level, which is where this previous bear gap remains on earnings. And you can see it's also in this low volume node. So really trying to get back into this high volume shelf and start chopping through there, grinding to this gap. And that's what I'm thinking will happen into November. So I'm playing October 31st dates as well as November 7th dates. And then the November 21st dates are much more expensive because of the implied volatility around earnings, which is like from 30 to 40%, so before and after earnings. So it's a little bit cheaper if you actually front run it. And that's why I chose those earlier dated contracts as well as a few November 21st, just in case these positions don't play. Then maybe I'll actually collect on this position and that will more than cover my total hold, right? So there's 95 to 100 calls. I have 2 of them. That could turn into $1,000 on its own if it's trading over $100 by November 21st. And if that happened, then, I'd have $1,000. I'm already up $200. So I'm like $800 or almost $900 in this trade. And so I'd get most of my money back if I was wrong on all these shorter dates. But now that there's some hype, we got some luck around the PE buyout rumors. It's more than likely that we're going to push over 90 and continue to float higher. I just hope that they don't announce anything. Now that there's hype, that's all I need for the stock to run. If they announce that that's not going to happen, then the stock might actually drop on that, and that would be bad for us. But if it actually ends up being true, then of course all of these are going to be in the money because Target will probably push well over $100 on an actual acquisition. So that's kind of my thoughts there on Target. I'm going to kind of skip around a little bit here. A lot of people have been asking me, like, how do I find these trades? Obviously, like, you can just search through here. Like, I search Target to understand like what the sentiment is, the news that actually was shown. Also, if you just follow a bunch of different accounts, like Serenity is a really good person that I've started to follow somewhat recently. And his account has just exploded to the upside. So this is someone who actually knows what they're talking about, like understanding catalysts and macro and tailwinds and actually looking at the fundamentals. I would say that Serenity is probably less of a technical person. I'm more of a mix of all of these different things. I will take whatever I have at my disposal to actually enter into a trade. And I'll read a lot of these things that people post and try to understand what their thoughts are. And I don't have to enter their trade, just like you don't have to enter my trade. Like Wi-Fi here, this was a really speculative one. I actually found this through someone else who was talking about it. It's a very small data center play as well. And I kind of just sat on the sidelines. It didn't enter into it. But that's kind of like a good way, is just building out people. They could even be wrong. Like, you could follow people who are not good at all at what they're doing. Maybe they spark an idea in your head, and then you do a little bit more due diligence, research of your own, and then you understand, oh, I actually should enter into this trade. A lot of times people are just spewing about random nonsense or making random drawings on a chart that don't really make any sense. It's not really following any technical sense from my perspective, but it might spark an idea. Then I go in here and I look at the charts, look at the company, the valuation, what's going on in the sector, what's going on in that specific index that sector that company is in, and then try to understand where it's all headed. So that's kind of like the logic of all of actually how to like develop a setup, like when you actually do all that due diligence to actually pick out a trade and that you want to actually enter into. Bouncing around here though, just this week, tomorrow we do have PMI data, Wednesday, October 1st at 10 o'clock. So there could be some movement there just around if PMI is hot, then the rate odds will drop. If PMI is cool, then the rate odds will actually go up, which right now it stands at 99.6% for a 25 basis point cut in October. And in December, there's a 76% chance that there will be a secondary cut behind it. And if you do the math on that, it's like around 74% that there will be at least 50 basis point cut by the end of this year. And then of course in January, there's even a decent chance that we could see another 25 basis point cut in January. So we'll see how things shake up. The market right now is very data dependent. And then of course we had the government shutdown. So at midnight, this should take effect. The government is going to shut down. There'll be like some furloughs, non-essential services. Those will stop working essentially. It's really not that big of a deal. This was already pretty priced in. I think like over 90% odds that this was going to happen. It has happened in the past. Usually it's resolved within a week. So I don't think that this will actually cause too much of a problem, and they're going to continue to meet after the shutdown pretty much every single day to try to get this resolved, get a deal done. And really it's just on them because they all probably want to go to the Hamptons. They want to go, on vacation. They want to get the deal done, shake hands, do all those things. But we'll see how this plays out. I don't think it's really that big of a deal. I think most of the sell today was driven by the fact that it was quarter end rebalancing, like small caps. A lot of those growth companies actually had a really big hit, like Unity sold 6.75% today. A lot of people are starting to panic. As you know, if you've been following along, we are still bullish this company. We did take a decent amount of profit out, especially on shorter dates. I haven't been entering into Unity as aggressively. If you've been in the Discord, I've been just buying some March dates on dips. I bought like one today. I'm probably going to wait and see how this plays out. Really what I'm looking for to enter into short-term dates is to see this downtrend break, right? So like we broke through this uptrend, we broke through it, and then we came back up, kind of hit a retest, and then we started to dump lower. And we did have some news about HSBC downgrading this from a buy to a hold, but their target price was actually raised from $37.50 to $40.80. So they actually raised their price target, but it was technically downgraded and therefore it sold. But not really in any worry here, because I do think November during its earnings, that could go really well. But we just have to be mindful and not play shorter dates and take a lot of risk. Really what we're looking for is a break of this downtrend. This green line, we did break out of this broadening wedge before and actually held above that level for a period of time. But now you're starting to see that we are coming back down to retest that. And then you do have this low volume node here at 35.58. So if 38.92 gives up, which was that previous resistance for a period of time, as well as a support level. So that's a pretty key level. If 38.92 gives up, it could kind of sneak below here intraday and try to close back above. That would be a pretty good sign. I probably wouldn't enter that yet until this orange line breaks, because that would be a break of a downtrend, and then we'd probably start to rally, push back towards 41, 43, maybe even get back into this range and fill this gap that remains now. We have a bear gap sitting here right above that 43.52 level. We're going to want to try to get through that to get to 50. And so that's kind of like how you look at the price action of volume profile, as well as different support levels where candles have reacted before, as well as trend lines, and try to get a sense of where price is headed. For us, we don't really care where price goes. Obviously, we'd love for it to go higher because we still have January and March dates. But from a trading perspective, we already have taken out as much profit as possible on this whole move. What we're really looking for now is a solid setup to actually go long again. It's not really worth going short just because the options chain is so loaded. We'll see how things trade after this week. And then, of course, we got earnings coming up, and I think Unity is going to do well just because of all the client testimonials around Vector, its ad tech platform. So that is Unity. I want to cover Target really quickly. There's a few other things that I forgot to mention at the start of this video, but really what we're looking for is a break over this $90.15 level. And then there is a little bit of a low volume node that's like right around this $91 level, but I don't think that that's too much of an area to watch out for, since the two higher volume shelves are in this like 96 range and then this 87 range. So we're really looking for a push here up towards $100. You can certainly take profit at any point. You are the captain of your own ship. You don't have to follow everything that I'm doing. I'm not going to always get it 100% right. You should always be taking profit into strength. But really what I'm going to be looking at is for a move through here. And because I'm playing spreads, as it gets through and gets in the money on these spreads, it's actually in my incentive to try to hold as long as possible, because at expiration, I actually achieve max profit. Even if it goes like to $100 or $106, like I'm not going to actually sell that position, because by that point, it's unlikely to fall back to $94 to $96 by November 7th. So you have to understand the different strategy that you're in. With calls, it's actually incentivized to sell earlier in the strength. And with spreads, you might actually be in your favor to try to hold out before taking profit, because every day that goes by, your spread will get closer to maximum profit. But with Target, another thing that kind of stuck out to me was the fact that I looked at consumer staples. Obviously, into the year end, people shop at Target, Walmart, things like that. They buy gifts for their family members. So that's bullish. Even think for things like Amazon. Amazon's one that I forgot to actually add today. I'm most likely going to add later this week. Hopefully there's another dip and I can buy and average into Amazon more, as it will probably do well into November, which is kind of similar to how we played Apple. Apple, we were really bullish into year end. We still have December calls for Apple. And that's because it's all on people's minds. They're buying iPhones, iWatches, AirPods for their loved ones. They also think of Apple. There's somewhat of a backstop in that trade. And it's the same thing with Target. Obviously, there's a lot of like risk in the market. Consumer staples are kind of a defensive play, right? Because people still have to go shop, buy essential goods, food, household products, those things that they can't really live without. And so I took a look here at XLP, which is Consumer Staples Select Sector, and you could see it actually sold off over a period of time, which lines up with Target. So Target was also in a downtrend. We had this really big gap down as well on Monday, the 22nd. And then it kind of got down to this higher volume shelf. And so I decided to actually enter into Target as well, because Consumer Staples is also near a support level, right? So you can see, just zooming out back, you can see so many times it's reacted around this zone. And so even though it's blown past it a few times, I really was looking at Target. Target's probably the first thing you'd look at, then you'd look at the sector, then you'd look at the index. I'm bullish on small caps because rate cuts also benefit them. Small caps has not quite blown through its all-time highs yet. I think it did actually get the close or very close to the close but then it rejected. And I still think this is going to continue to push higher because rate cuts affect these small cap companies the most. So I think that IWM will break out. I think consumer staples is at a support level, a key support level. And then I think Target is oversold within those support ranges. And then, of course, now with an ex-dividend date on November 12th, those are all the things that I was looking for to actually enter into that trade. So really high quality setup. nbis, this is one that we talked a lot about in our last episode. And I'm still bullish here. It actually did break out of that bull flag. It kind of held this gap. So the gap remains open, which is really good. We broke out of this downtrend. Didn't have too many reactions, just 1, 2, 3. Then it broke through, gapped higher on the CoreWeave meta deal. And then hopefully what we're trying to see here is a continuation higher towards 120 to 130 range. I am in October dates as well as November, December, January, March, and June. Really bullish on this company and this sector specifically because hyperscalers, there's too much compute demand around AI. Everybody is using it. And that's not going to slow down. People are using it pretty much for everything. And then ChatGPT is rolling out new things like DocuGPT, which just crushed DocuSign today. Really every single company is using some sort of AI feature. And with that comes a certain level of demand. And with that comes out building out more infrastructure. And so I think nbis is a really solid play, as well as CoreWeave, as well as Wolf, as well as Marvel, as well as White Fiber. All of these companies are going to continue up and to the right just because there's so much money being thrown behind these companies. Everyone's in that race to super intelligence, like Mark Zuckerberg said, and they're not afraid to spend hundreds of billions of dollars in CapEx for these companies. And nbis is probably the best considering it's at 28 billion market cap. I really like the CEO Arkady. He was one of the founders of Yandex, which is a Russian like Google company, one of the biggest search engines in Russia. But yeah, they have a huge team of engineers, really bullish on this company overall. Can't say enough good things about it. And then lunr, this was mainly just a technical play. I don't really like these types of companies. Like, they don't have a lot of revenue. It's like, just moon missions pretty much. They do have a mission coming up in January, I believe, or early 2026. Their last one was successful. I think that was like very early this year or late last year. But just from like a technical perspective, some of these like futuristic companies do well. Like Quantum has run up, Oklo with nuclear reactor energy. All of these things are doing well. It's just a lot of hype behind them, and rate cuts are also bullish for them. With lunr, they actually just broke out of this downtrend, right? So I was just looking through here and I just stumbled upon it. Like, I have a huge list of stocks I just add to, and then I kind of just thumb through it and see what looks good on the chart. And if things are lining up, then I'll actually do a bit more due diligence into it. But with lunr, there's like a lot of hype behind this company. It just broke out of this multi-month, like almost a year now, downtrend. And you can see that there was a bit of an uptick in volume. As you can see, that's starting to increase. So that's bullish. We broke through there, came back down for a retest, and now we're starting to push a bit higher. There's a low volume node here, so I'd really like to continue to see us hold this like $10 level. There could be some volatility, and we could definitely chop back down towards $9. But I think going into November and December, it's pretty likely that we could have an explosive move up towards like $12 to even $13.43. So that's what I'd be looking for on lunr going into year end. Duolingo, this one had a bit of a double bottom that played out. We actually got a pretty awful entry on this as it was breaking down. So it had like this fake out that happened. We were entering into the position here, and then it dumped on us, and then we averaged down quite a bit. We're actually green on this position now, but you can see that kind of like a same setup here. Like it had this impulse move down lower, and then it has a little bit of a gap there, but then As you can see, this is like a neckline, and we actually broke through that. Now we're retesting and holding that level. We rejected from this 331 area. So what we'd really like to see is this 310 level to hold, and then try to get through 330 before we can potentially see a move all the way back up to this 370 level, which is a retest of a break on an uptrend. So I would probably start scaling out of position, especially shorter dates. This company is kind of like a futuristic AI play as well around education. It is very risky in that sense because Duolingo is trading at a high valuation. But nonetheless, I still think that it's worth some risk if you're just looking to hold long term. And that's kind of what I'm doing. I'm kind of contemplating maybe de-risking a little bit. The position's not that large, but if there is going to be a market correction sometime next year, I think a lot of companies could be trading for a lot lower, and Duolingo could be one where you can really get in at a really low discount. I wish it probably would have stayed down here a bit longer so I could have been loading in more. But if it gets up to this 370 level sometime by the end of this year, I might actually cut out of this position and then wait to see how things trade as we get deeper and deeper into these rate cuts. Because at some point, I do think the real economy will slow down, the job market will weaken and deteriorate, unemployment will rise, and then there will be a bunch of layoffs, and then there'll probably most likely be some sort of a recession or a bear market. So really just trying to be as patient on this one as possible. I know I'm talking a lot here, and I'm going to flip through a few more and then wrap up this video, but HIMS, this one is in an uptrend still. It did have a sell a bit today because of the Trump news with Trump RX. They're trying to sell prescription drugs through the White House. Who would have thought the grift would take us here? But nonetheless, that's where we're at right now. And we did have a bit of a sell-off. It was down 5 or 6% at the lows today, starting to bounce a little bit. Short interest is decreasing a little bit, which in the grand scheme of things is not that big of a deal. You can go to fentel.io and just type in any company. I typed in HIMS, and you can see the short interest float is at 33, 34%. And then usually what I do is I just add how many shares on the off exchange and then add that into here. And then you can divide that by the total share float to see what percent of total short interest. And I think it's around 37%. So it's still really, really high. Most companies, even like around 20%, could have a short squeeze. Days to cover is 3 days. What we'd like to see is this to increase. The short interest ratio is how many days it would take for all the shorts based on the daily volume to cover out of their position. So for them to unload 66 plus 7 million shares, it would take them 3 days based on the average daily volume to close that position. 2 to 5 days is like pretty moderate. You'd want to see this closer to like 8 days, 7-8 days, and that's when like things might actually start squeezing to the upside. So that's one thing to keep an eye on. The number of shares available as well. If there's less shares available, then people might also be squeezed out and starting to cover. And then you could also look at borrow fees. If it's expensive to borrow, then they might get squeezed out as well. ABCL is another play that we're in. And if you look at the short interest here, it's 22% and it takes 11 days to cover. So I'm really bullish right now on Abcelera Biologics because short interest is elevated at 22%. And the number of days have actually gone up from 8 to almost 11 days. And so I'm still in this position. I think this stock can continue higher. It broke out of that downtrend. It's kind of doing a similar pattern here, this like up and down move, uptrend that HIMS is doing. And I'd really like to see this break over $5 or 505 actually, and then get towards 536. And I think because short interest is so high, we could definitely see that move towards 582 and even potentially much higher on Abcelera. This is kind of like a hype stock, futuristic kind of thing, therapeutics. And I'm definitely going to be taking a lot of profit as we get closer to 580 to $6. I have naked calls on this one. And then just real quickly on HIMS, we are in that little uptrend. So we're getting like this impulsive move and then like a few days of red and then another impulsive move. So just keep that in mind if you are on any shorter dates. But really what I'm looking for here is a move back over that $60.40 level that we talked about. It rejected there, multiple candle reactions. I talked about the 60 to 64 area that you want to be careful of. That's a low volume node here, and that's why we rejected. Really what I'm looking for though is to try to push back through, break through here as we kind of do this staircase action on price. If we can get through that $60.40 level, then we're going to push towards 64, and then there's not a lot of volume above here. So we can definitely see a move towards that 68 level. Now we do have this little sneaky trend line, the upper trend line from the two highs back in February through July, and that area will act as resistance. So on any shorter dated contracts, it is worth it to take profit in like this 64 to 69 level. I'm probably going to take a lot of profit out here and be completely in the money by that point. And what I mean by that is that by the time it gets to 64 to 69, my positions will be at least 200%. Okay. I'll be up 200% probably on every single one of my positions. Some of them I think I am close to over 100% already, or over quite a little bit over 100%. But at this point, that's a 3-bagger, and you should be selling at least a third or a half of your position and then maybe letting the rest ride, or just taking all the profit here. Hopefully it drops, and then you could, buy back into this position, and hopefully it breaks through, gets towards that 73. A lot of this will depend on how squeezy it gets, is how short interest develops, right? If the days to cover increases, the short interest increases, or it remains over 30%, if we can break through there, then things are going to start to squeeze a bit more, because 35, 40% of the share float being sold short on a company that is growing very rapidly, it can have an explosive move. So you don't want to miss out on that either. Another strategy you could do, instead of just selling out of your position completely, is you can actually just sell covered calls. So at least in Robinhood, if you're on a margin account, you can sell covered calls. So say you have a 60 call for December, or you have a 70 call for December. Well, say price gets up to like this 69 level, you can sell up into your expiration or earlier a covered call that will use your later date, the Decembers that are deeper in the money. You can sell an out the money call, right? Because this will cover anything above 60, or it can cover 60. It can also cover 60. So 60 and above, you can actually sell shorter dates if you want to weather like any interim pullback on the position. And then say it comes back down here, and then you can buy back that covered call that you sold, which maybe you'd be up like 60, 70, 80% on. And then now you're naked, and then the call will, this call here now is naked again. So then it's going to increase much more as price moves higher. So there's a couple different things you can do to manage your trade, and it just takes a lot of feel and time. If implied volatility spikes really high, maybe it's just worth taking profit, or like I said, selling those covered calls. And then just real quickly with Grab, like this one it hit that 661 level. It's pulling back. I'm still very bullish on this stock long term. I think that once we get over the 661 level, it's going to have a really explosive move to 764. If you just look at the weekly chart, and we just remove all the drawings here, you can see that price was coiling in this range for a very, very long period of time. And on the weekly chart, when you're trading long term, usually you look at the higher time frames. If you look at the weekly chart, you know, it had this break of this trend, right? So let me just remove all the drawings here. You can see it broke through that level finally. It got through there, it broke through. Look how much volume. This is an insane amount of weekly volume back to back to back that you're seeing. Now it's starting a little bit of a slowdown, which is a good thing because it's pulling back. So it's pulling back on lower volume. It's shaking out the weaker hands, and then you're going to have another momentum move higher. So usually when you have a break of such a long, not only that, but then, you know, this bottoming pattern here, you know, we broke through that level, came back down during the tariffs, and now we're broke through this. So you have this huge amount of consolidation on the weekly chart for years, and then another year above that level on the breakout. Now we're seeing this explosive move higher. We're gonna most likely consolidate above this breakout zone, and then you're gonna see another impulse move higher. And I'll probably start to take some profit at those levels that I was looking at before, over that 661 level. So really bullish here on Grab. I still think there's a lot of meat on the bone for this one. And then, you know, it could definitely get through 764, but that is an area to start taking profit on those shorter dates again. And then hopefully we can get that move towards $10. The fundamentals of this company are likely to continue to improve next year. And there's a lot of other notable investors that are buying into this stock that we've talked about before. So overall, really bullish. Like, still think Tesla will make all-time highs. I still think Apple is just pausing here before it makes another move higher with the holidays. Amazon, I'm going to be entering into. It had a bit of a breakdown here. It's falling back into this 220 range. If it can hold this area and start pushing back over this more recent downtrend that you're seeing here, so it might take a little bit of time here, might take a few weeks to get through, but if it gets back over this 225.82 level, if we can get through there, then we're gonna see that move to 233, and then hopefully break through and get through that all-time highs around Prime Day, Black Friday, around holidays. There's gonna be a lot of spend. And then of course, Amazon might have a deal with, you know, building out some more data centers of its own. So we'll see how things play out. Things are gearing up really interesting. I'm still very bullish into the next rate cut at the end of this month of October. And then same thing going into December. And then sometime around December, might start taking a little risk off the table and see how things go. And then Bitcoin, still in this bull flag. We're likely to break out and have that crypto winter. Well, yeah, crypto usually does well in October and November, not so much, not by the actual word winter. It's more like a summer for crypto later this year. So I think crypto is going to do really well. And then of course, Litecoin, we are about to enter into October. So let's see if these ETFs get approved, and then we start seeing some institutional flow here on Litecoin and get that breakout, as well as Ethereum on SBET and Bitcoin. So I know I covered a lot in this video. I'm going to be posting a bit more often now that I'm back from vacation. I really hope you enjoy this video. Like, subscribe, make sure to join the Discord, and I'll see you in the next video, guys. Peace.